Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclico.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He's speaking to us from Arizona. Welcome back to the show, Mark.
Glad to be here, Jim. Thanks for having me.
And Happy New Year's for all of our Orthodox followers, believers. 2 weeks behind everybody else, and all my Ukrainian friends said, "You think we're dumb? Hey, we get to go to all the Boxing Day sales in Canada to stock up for Christmas." Smart people. Mark, first of all, do we have a special offer for our listeners?
Yeah, let's still use the old one, and I do want to mention my disclaimer that I'm not a financial advisor, nor do I provide financial advice, but we do provide our educational newsletter, and that is available at a discount using the promo code 2022 half off 2022 HALFOFF. And you enter that in the promo code when you go to the order form at VRTrader.com. VRTrader.com.
Now, going into the new year, we talked about what's called the January Barometer. Are we seeing that on the markets?
Yes. So far, the early warning system, which I can't take credit for, was created by Yale Hirsch back in the 1970s. And the first 5 days net were higher. My only concern is a lot of people are following it and talking about it, but, you know, maybe I'm just being a bit of a cynic because I've been talking about it for nearly 4 decades, ever since I met Yale Hirsch. And actually, as I mentioned in a previous interview, he acknowledged me in the introduction in his 1987 edition of the Stock Traders Almanac, so I guess I'm a little biased, but in any event, you know, I don't want to discredit it, but it is positive so far. Now we have to wait for the end of the month, and at the end of January is net higher as compared to the close on December 31st. Then you have a double whammy, and that would confirm a possible, you know, resumption or a bull move or an up move for 2023. So, you know, I'm not going to fight it, but it's like I mentioned, and I keep using the same expression, you know, it's like the old weather forecaster. You've got a forecast, but you want to look out the window first. In other words, you want to make sure that the short-term stuff is confirming what the big picture stuff is saying, and there's not something else happening, like wars breaking out, or the stock market suddenly breaks through some support level that it wasn't supposed to, or, you know, or it's a geocosmic event, or, you know, God knows what else we could talk about. But the bigger concern for me is the war, which I think is already underway, and it's not talked about. All they talk about in the media is the Federal Reserve, which is absolutely ridiculous because they don't control the world nor the stock market. So that's just one small piece, and we already know they're incompetent, and there's been more and more discussion about abolishing them. In fact, I was really encouraged the last couple of days. There was actually a bill in the U.S. Congress about abolishing the IRS, so it's not going to go anywhere. I know Mike Huckabee, the former governor of Arkansas, I put this in my newsletter, actually did a video on this a couple months ago about abolishing the 16th Amendment to the U.S. Constitution, which essentially creates the IRS and taxes. So it's funny that the Congress did that. But going back to the Federal Reserve, they also need to be abolished, along with the FBI and a lot of other, you know, incompetent institutions in the U.S. But as far as the January Barometer, going back to your original question, so far it is showing some positive signs. But I also have to mention on a geocosmic basis, and people think I'm an astrologer when I mention stuff like this, but I look at everything, as you know, lunar cycles, The equinoxes, next big one, by the way, is March 21st, so we got to watch that one, which often is coincident with big market lows, so that's just something we got to watch for. But as far as planetary and geocosmic stuff, there's this thing called Mercury retrograde. And again, I'm not an astrologer, but it's like looking at the full moon and the new moon and seeing they are coincident with market highs or market lows, which I've done for decades, and along with my volume work and all my other indicators. But we're in this Mercury retrograde period, which ends January 18th. And sometimes when you're in this period, it's about a 20, 30-day period, markets do the unexpected. They do the reverse of what you would normally expect. And we're in that period right now. So this rally we're seeing, even though the January barometer so far has been positive, and I am trading it, I am in some stuff, I'm a little dubious about whether it's going to continue beyond mid-January. We might see the market turn south. So I wouldn't be going crazy here, and just watch your back here a little bit. But so far positive.
Now, we have a rally going on. It seems to be a broad-based rally, except for what used to be the hottest stocks, the so-called fangs and their friends. I called them saliva as a joke. But they're not doing all that hot, but everything else is. What's the explanation there? They were just too overpriced to start this whole thing?
Yeah, and it's tied to the interest rates. When interest rates were low, that benefited the tech stocks, and when interest rates start moving up, that doesn't benefit the tech stocks. And I don't do a lot of fundamental analysis, but this is what your conservative analysts would talk about. It's interesting because the other indexes, actually one of the strongest indexes is the Dow Transportation Index, which took out the 200-day moving average, which is a big deal to market forecasters. And, that sort of broke out here actually today, whether it stays up or not, and it looks like it might go a bit higher. But if you look at the NASDAQ index that tracks, for example, the NASDAQ 100, it's nowhere near the 200-day moving average. So they're definitely underperforming. So transportation, the Dow Industrials seem to be leading the way up here a little bit. It's not as broad-based as we would like because not all the indexes are confirming, but, we're in this, a little bit of euphoria here, Fed's meeting February 1st. They're hoping they only get a quarter-point rate increase. Consumer price index came out. It was pretty much anticipated, but, it came down by 0.1%, 0.1%, and everybody gets excited about that. So, we're sitting around 6.5% inflation versus that 8.5 level, and they think they're winning the war, and everything is going to be great, and the Fed's going to win, and we're going to get down to 2%, which is not going to happen. So, I don't want to sound, like a super bear here or anything, but, a lot of analysts out there, you probably heard this yourself, they're saying, and you can look at this as a contrary indicator too. Experienced analysts are advising investors, why take a risk in the market? And I even mentioned this, why don't you allocate some of your money into risk-free assets like U.S. Treasuries, for example? So when this happens, there's billions of dollars under management that will be not there to buy stocks. So the more cautious investors are, and you could say, well, they're cautious, that means it's going to go up, and and everybody's going to be wrong, and we've started another bull market. But the other side of the coin is that people are conservative, and I would say rightfully so. What's wrong in getting 3.5 to 4.5% risk-free on your money in an uncertain environment? But by doing that, like I say, there's going to be less money around for stocks, which could be a depressant. Even if we are going higher, it won't go as high as it might, but I'm not in that category yet, so we'll see how it all plays out.
Well, Mark, that would just be plain boring for you, wouldn't it? What fun is it?
I always find ways to get myself in trouble. So we've been doing stuff here every day. For example, one of my favorite groups, or probably my only real favorite group right now, is energy, which is starting to move back up again. So you've asked me in the past about oil, so I'm bullish on oil and oil-related stocks. So. And we actually saw a little life come into a little Tilray, which is, as you know, the Canadian cannabis stock. And we jumped into that here and mentioned it in our newsletter because they decided, well, they can't make money with cannabis, so why not grow tomatoes? So I'm actually more bullish on them as a company that would grow, regular vegetables, because I think there's going to be food shortages and everything else, and they got millions of square feet of space in Canada to grow cannabis that nobody's buying. So why not grow vegetables and sell that? Because we're going to need that more, I think, than cannabis. So the stock's starting to uptick a little bit. It's a little $2-3 stock. It used to be, $50, $60. I remember even as high as $150 a couple of years ago. So there's some interesting stuff out there. If you look around, I mean, there's always, what's the expression? Even Jim Cramer talks about this on his show. There's a bull market somewhere, so you can always find something that's moving.
Yeah, and I was going to say, too, in the wintertime in Canada, we're always paying way too much for fresh veggies, $8, $10 for a head of cauliflower. Yeah, so their Tilray may be onto something.
I think they are. I mean, if they really would, they're waiting for U.S. legislation to come through to bail them out, that they can do stuff here in the U.S. So we'll see if that all plays out. But, we've been in a bear market on the cannabis stocks now for a couple of years. So, there's always, a turning point at some time, and whether it's cannabis or they all decide to go into the vegetable business with all that square footage they built for cannabis, time will tell.
Well, they're looking for places to put the homeless so they can stay there and harvest the crop and make some money.
That sounds like a good suggestion. Maybe we should contact Tilray and tell them that.
Also, in British Columbia, they're examining having marijuana lounges, much like you have a bar for alcohol.
Okay.
Why not? I mean, it's a legal product. People like to get together and socialize.
Well, they're crazy enough down here with some of the liberals in some of the big liberal cities. They want to create like these drug, I don't know if it's the right term, sanctuaries or stuff, these areas where you can go and get all the drugs that you need, and that way they feel like it goes back to the thought that's been around for decades. Since drugs are illegal, why not just make it legal and give it to everybody and solve the problem? It's almost that kind of stupidity. So that there's some of these areas, sanctuary areas or whatever they're setting up, or they're planning to set up, where you can get all the drugs you want just to appease those who really need it and can't afford it. So insanity runs rampant down here in the U.S.
Well, some of the drug experts I've interviewed said it's not the drug, say heroin, that kills you. It's all the impurities. You don't know what you're using. It's like if you went to the liquor store, you don't know if that's 3.5% lowball beer or an overproof whiskey when you buy it. When you're buying a street drug, you don't know what you're getting. And if it was regulated, at least you know how strong it is and if it's pure or not. After Prohibition, they tested all the alcohol that was being sold. All of it had some kind of adulteration, some kind of extra stuff put in it that the booze shouldn't have in it. Even the name brand stuff from very reputable distillers. So maybe that is the solution, because our current thing of just throwing drug users into jail hasn't worked. They've done it for 100 years, and people are using more drugs than ever.
I know there's some merit to that logic. I can't support it, wholeheartedly, but I see the reason behind it, So maybe they're right and I'm wrong. But like you say, there's other stuff in there that can kill you.
Yeah, you just don't know what you're getting. We'll have more with Mark Leibovit right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. What's happening on the gold front?
Well, it's moving higher. As we know, the U.S. dollar continues to deteriorate. It went to a new relative low today, getting down to the 102 level, as high as around 115 in recent months. And that supports the precious metals. Now, whether this is just a big bear market rally in gold, that I can't say. I mean, you don't know how far it's going to go, how long it's going to last, but it is in an uptrend. A lot of bulls out there. Some are calling for huge moves this year. As I've told you before, if we ever get above 2070 in gold, then we're probably going to run another $1,000 an ounce or something. There might be one heck of a trade there, but many are very oversold. I'm interpreting it as a big bear market rally, and you can make some money with it. trading it. Not that this is the move that's going to carry us, but as long as that dollar continues weak, I may be wrong, and that could support maybe the big breakout scenario. So yeah, I'm constructive because the scenario is one, and the charts show that we're in an uptrend. So at least for the short term, it's still tradable on the long side.
Anything positive happening with cryptos?
Yes, in fact, we bought or added Bitcoin to our recommended list. Not Bitcoin itself, but the ETF, the Bitcoin Trust, GBTC, which, is only down from, we talked about this in previous interviews, it's only down from like $52 a share to $7. So to me alone, that says, they washed it out, and it's probably good for a long play. So it was up almost $1 today on the GBTC, and Bitcoin was up as well. And from what I also read and heard, I'm not an expert in the area, but apparently the Securities and Exchange Commission is going to leave Bitcoin alone. They're trying to regulate everything. They're trying to get XRP and Ethereum and the whole group of them categorized as securities so the government can have its claws in and dictate and control the crypto market. But they stated that Bitcoin is excluded from that it's a commodity, it's not something that they can regulate. And to me, that's a very bullish statement. It really says that. This thing could possibly take off. I have more of a 2-3 year perspective with it, the way the thing's been trading in the last, 15 years. It goes all over the place, as you know. It could drop up $20,000 and drop $20,000. But, we're in it here. I like that. But, it'll be real interesting to see if the SEC prevails. There's a big lawsuit, with Ripple and the SEC about them controlling them, whether they're a security or not a security. And I don't have all the current details on the lawsuit, but if it works out in favor of Ripple, then XRP, which is their little cryptocurrency, could take off big. I think it's trading now about 35 cents or something. It was high as $1.80. It might be a speculation for those out there that are interested in playing that market. So it'll be, in the weeks and months ahead, we'll see, it was Gary Gensler, the head of the SEC, is pushing for control of the crypto market with the exclusion of Bitcoin. So, I guess I'd be a player of Bitcoin more, because if they can get their claws into it, Bitcoin might be the best, the best living horse in the, best horse in the horse glue factory. Is that the expression, right? Last standing horse.
Prettiest pig in the slaughterhouse, yeah. All those cliches. Mark, so anything else we should be keeping a close eye on?
Yeah, we got the Fed meeting February 1st. That's coming up. We got Monday, Martin Luther King Day here in the U.S., which means all the markets are closed. I know they're open in Canada, but, it's going to be a long weekend here starting tomorrow, Friday. So, traders and so forth, take that into consideration in terms of their strategies. And, that's sort of about it on the economic front here from the way I see it. So, we'll pick it up next week.
Mark, thank you so much for chatting with us, and looking forward to meeting up with you at the end of the month or the start of the next month for the big conference here in Vancouver.
That'd be great. Thank you, Jim.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He was speaking to us from Arizona. If you have any questions for Mark or any of our guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.